The Dunham Quarter in Twos gives you a concise outline of what we view as the most notable economic events that occurred this quarter, involving domestic markets, international markets, and the bond market, all in about 2 minutes. When winter rolls around, it means it's time to break out the snow gear, goggles, skis, and hit the snowy slopes. This quarter, we also had to gear up to ride the ups and downs of the market. Equities performed well this quarter, creating a positive economic backdrop for investors heading into 2022. The unemployment numbers improved, and markets largely rebounded after the uncertainty caused by the Omicron variant of the COVID-19 virus. Despite inflation rising almost as steadily as a ski lift, the S&P 500 ended the 3-month period at 11.01% and the MSCI ACWI at 6.68%. Throughout the year, we have been monitoring the up and down relationship between growth and value equities. Value dominated Quarter 1, while growth made a comeback in Quarter 2. Quarter 3 showed ups and downs from both, and in Quarter 4, both large and small cap value ended higher than growth once again. Advanced skiers know it takes a diverse set of skills to smoothly navigate the slopes, just like it takes a diversified portfolio of investments to navigate volatile economic environments. Investors with a diversified portfolio skied through the ups and downs of growth and value. Now let's look at cross-country skiing, and by that we mean international markets. Regulatory concerns continued to be a factor in China, once again having a negative effect on emerging markets for the quarter. European markets additionally remained a source of uncertainty to U.S. investors as Europe continued to handle COVID-19 outbreaks. It takes great care and technique to slow down while skiing steep downhills. The Federal Reserve's version of reducing their downhill speed was to reduce the monthly pace of its net asset purchases. They plan to reduce monthly asset purchases by $20 billion for Treasury securities and $10 billion for agency mortgage-backed securities. The Fed has discussed the tapering of purchases for some time, altering the techniques of past committees in order to bring themselves to a more graceful stop. Intermediate-term bonds in particular faced setbacks. However, the entire bond market felt the effects of the adjusting economy. The Bloomberg Global Aggregate Total Return ended the quarter down 0.67%. As we head into 2022, there are a few things we'll be sure to monitor. Although interest rates are rising, they remain historically low. It will be important to watch these numbers and take them into consideration as investors continue to express concerns over inflation. It will also be important to continue to monitor how the decisions made by the Federal Reserve will affect the performance of bonds into the next year. Until then, we will take the knowledge we've learned up to this point and use it to traverse any upcoming mountains as smoothly as possible. Please subscribe to our channel to stay up to date on the latest Dunham insights.